My name is Tracy O'Malley, and I'm the Executive Director of the Plus Group. We want to thank you for taking the time to join us today for the Plus Group webinar series. Today's topic is Complementary Business Planning Services, and it will be presented to you by Principal Financial. Our presenters are Michael Sir, Disability Income Regional Vice President, and Patty Bell, Advanced Solutions Director. All lines will be muted during this webinar. If you would like to ask a question, please go to the question pane on your control panel and just type it in. We will answer the questions at the end of the webinar. Also note that we are recording the webinar. It'll be sent to you along with the presentation in a follow-up email, and you should have that by tomorrow. Okay, everyone, let's go ahead and get started. I'm now going to turn this over to Mr. Michael Sir.
Well, good afternoon or good morning, depending on what part of the country you are. Thank you for taking the time to learn about this subject and for investing the next bit of time into your business. The title of today, again, is Complementary Business Planning Services with an individual disability insurance purpose as part of the planning, as part of the planning process for small and mid-sized companies. The first slide is why work with business owners. One of the things I've been with Principal now for 18 years, and as a Disability Income Regional Vice President, and my daily effort has evolved to almost probably 80+% working with small and mid-sized business cases, trying to solve the many problems that most businesses have never taken the time or have ever been asked to take the time to solve. And that's really what the purpose of today is to understand where the needs are and where the problems really are. In this particular slide, we all know that small businesses, they really do need our help because they have not had the planning done. Obviously, they play a vital role in the economy. They don't always take the time to plan. They have multiple planning and protection needs. If you talk to any business owner, every one of them is busy, like really busy. And so unless somebody that they trust will sit down and ask them to focus on a disability planning and the overall business planning conversation, they're just not going to do it. They're just too busy running their business and doing their things and taking care of things at home or doing whatever they do. And one of the things that Principal does is we just spend a tremendous amount of time working with and understanding the business owner and key employee market and figuring out what their needs are and how we can facilitate that in a way that we can uncover their problems, figure out what they are, but have through a process, but also figure out how we can solve those problems through products and services. There's 28 million small businesses in the United States, and Patty's going to talk a little bit more about the survey that we do. But at the next slide, one thing I just want to emphasize is your expertise makes a difference. Business owners who work with a financial professional tend to have more stable businesses and greater peace of mind. Our surveys show over and over again that there's the need for planning and the need for representatives and advisors to work with business owners is very much important. And the ones that ultimately do work with an advisor like you have better plans. They're better prepared for life and for their business, and they have a greater peace of mind as a result. So I'm going to have Patty Bell. Patty, go ahead and maybe tell us about your credentials. I know, but I'd like you to share that with what you do down in Des Moines.
Sure. Thank you, Mike. I am Patty Bell. I'm in our Advanced Solutions area in the at the home office. I'm a CPA, and so I spend a lot of my day as an extension of help to our producers like you guys. And I've got almost 30 years in with the company, and so I've got a lot of good experience. And about 20-some years ago, the leader of Advanced Solutions said, I think the business market is where we're going to see some significant growth. And so he asked if I would join this particular team and provide some help. And so I've been doing this particular aspect for about 22, 23 years and helping business owners do the planning that they should do. As we all know, and Mike just talked about, business owners are busy and they don't always take the chance, the opportunity to do the planning that would make their business succeed to the next generation or take care of their key employees or their own special needs. And one of the things that we're going to be focused on today will be our complementary business planning services. As we've gone through some of our research, what we've found is that business owners who lack knowledge of what their business is worth use that as a hurdle to not plan. And so we have been offering these services for about 6 or 7 years, and we'll talk a little bit more about these, and it fits significantly into our research findings. And what you see on your slide is when we looked at and asked our small business owners involved in the survey, rank 10 benefit categories from highest to lowest. The number one priority was business protection. And the interesting thing about that is business protection has been number one for a couple of, we do this survey like every other year, and it continues to be number one as the top priority, business protection, but still a majority have not put a plan in place. And I think what that means is business owners tend to put the employees' needs and their own personal needs ahead of taking care of the business. And you'll find that too, that they take when they lose an employee, when they have something significant happen in the business, it tends to drive behavior. The second priority that we had is income protection, and the survey shows a significant decrease in the number of business owners with IDI. So I tell you that with individual disability income. And so I tell you that with the purpose of saying we all know that disabilities do happen, and you can see on your slide a percentage of the 3-owner firm having one owner out for 3 months is a pretty high percentage. And with the various markets, we've had very good experience in using some of our information to help business owners take action. So understanding the business market, understanding what drives business owners in making choices helps us design our products and design our services. And so what we have done, as I said, approaching business owners and that lack of knowledge of what the business is worth prevents our business owners from doing the planning that they should. So we started offering first the informal business valuation that you see on the left. And at first, the first year we did like 500 of them, and last year we did 2,000. We're going to do about 2,000 informal business valuations this year, and we found that just that ability to have get an idea of, not a formal valuation, but an idea of what the business is worth helps these clients get over that hurdle and do the planning, get a buy-sell agreement in place, take and get a position on disability buyout, and do the life insurance to support and protect that business. Then after we started doing the informal business valuation, we also started offering a buy-sell agreement review. Those are pretty thorough, and we will do about 400 of those this year. We're going to dig into both of these in just a few minutes, but we found that both of these services have been very successful in helping producers lead to good opportunities and writing business. So let's talk a little bit more about the informal business valuation. So what we do is we ask our producers to send 3 years of financials, either income statements and balance sheets or 3 years of tax returns. And for every single business, we're going to take that information and look at some key numbers and dig into the numbers a little bit and look at the value of that company based on 5 different methods. And based on the nature of that company, we're going to pick one of the 5 methods that we think is most appropriate for the company. And then we're going to use that as the first step in making sure they have exit planning covered as one of their primary needs and making sure it's taken care of. And so you'll see when we talk about the report, just earlier this year we used to use a vendor software that just gave the number to the client and to the producer. And we decided that, anybody can tell them what a number is, but how do we take that number and make it into an opportunity? And so it's a very comprehensive proposal that we get, and generally when we go through those with the producer, with the client on the phone, we make sure that the client understands where we got the valuation, and that this is just one piece, that we're going to not be able to spend every minute going through every single page of that proposal, but based on the primary needs, the conversation they've had with their with the producer, we're going to keep that conversation right in time with what they want to cover. And so that that very comprehensive report becomes then a tool for the producer to handle the primary need that's first and top of mind, but then provide an opportunity for the producer to go back to the client and say, okay, you had exit planning as your top priority, and we put some disability buyout in place, we put the necessary life insurance in place, and then you marked kind of your next priority was perhaps retirement income. And then when they go back, so it's a logical way for the producer to go back and visit with that client and make sure we take care of not just their top need, but all of their needs on the time frame that meets their timeline that they want to cover. The buy-sell agreement review is also a customized report, and what it does is we've split that report into the common sections that occur with a buy-sell agreement. So what we do is we go through each section of that buy-sell agreement, and we first lay it out into explaining what they have, and then lead into comments that are either best practices, or there might even be something that is maybe incorrect, maybe leaves a lack of definition, but offers an opportunity for us to help. It's been a very popular report to generate, and it's provided a lot of good information. I had a client who sent in the review and agreement, and as many of you know, it's very usual to have either a cross-purchase or an entity purchase agreement. This particular agreement was a cross-purchase agreement, but there were 5 business owners, and as you may know, 5 business owners does not lend itself well to a cross-purchase, so we would suggest that they do an entity purchase. So in my review, I very nicely said, I want you to consider changing from a cross-purchase to an entity purchase, and what they did is they gave that back to the attorney, and when the attorney came back and said, now what else do you see, they were able to execute that buy-sell agreement. And it was due to a merger that they had so many shareholders, and what happened shortly thereafter is the youngest shareholder came in to the majority shareholder and said, this is not working for me, I need to get out. And thankfully they had finished this agreement and executed it so that all the majority shareholder had to do was open up the drawer, pull out the agreement. They knew the purchase price, they knew the terms, whether they had to pay it in a lump sum, and they knew who was supposed to buy it. And so having that ability to simplify their life, they were so thankful that the producer made sure to follow up and get all of it done, that just simplified their whole life as a way of example. When we look at the key concerns that are addressed with the business valuation, when we look at 3 years of financial information, it allows us to look at what's going on? Is there an increasing trend? Is there a decreasing trend? Is somebody leaving the company? Did they lose a contract? I remember doing a valuation where in one of the 3 years there was a very, very low gross revenue. And when we went back for more information about the why, it ended up that that particular restaurant was in a flood territory. And in that year, most of the year they were flooded and they were unable to do work. So being able to look at the 3 years of information allows us to make an assessment about trends and what might be happening in the business. We're also able to look at what kind of impact a key employee might have. So that would be, along with business protection, that first primary need that we're dealing with, that involves taking care of a key employee. And as Mike will talk about, there's key employee from a life and a DI aspect, and making sure that we understand what happens should we lose a key employee and what things can we do to help mitigate that loss. When we look at those 5 different methods, it helps us understand what the varying degrees of purchase price could be. And when we talk about what the purchase price is, we want to make sure we identify a buyer. When we coordinate that with the review of the agreement, in a perfect world, a business owner understands who the buyer is going to be, at what time, at what price, and how to pay. And in our world, from the insurance side, we want to make sure that the right person has the right amount of money in the right place at the right time. And so you can see that fits in nicely to the services and the products that we offer. And then we also look at, for many of these business owners, the business is a primary part of what they own. And if they're not in the business, what are they going to use for retirement income? So we want to make sure that that business is either going to give that income to them, or they're going to have a way to generate that retirement income that they will need when they retire. From a buy-sell review perspective, we want to understand, does the agreement address all of the triggering events? Death and disability are 2 primary events that we want to make sure are covered. And in of all the reviews that we've done, we do keep a small database about those. And about 90% of the time, death is a triggering event. And believe it or not, it's not always a mandatory obligation. And the same with disability. Disability is covered about 2/3 of the time, about 60% of the time, 67%. The disability is a triggering event, but it might not be a mandatory triggering event. And so we want to make sure that people understand that should your partner become disabled or die, we want to make sure that somebody's obligated to buy. So just having an option to buy may not be good enough. When we look at that agreement, we want to know, is there a clear buyout price? Can we determine what the buyout price is, or does it require that the 2 people who now maybe have the buyer and the seller agree on a price? Well, now we put them in a bad spot, because they have competing interests. The buyer wants to sell for a high price, buy it for a low price. The seller wants to sell for a high price. So we point those kinds of things out when we review the agreements. We want to know, is the agreement properly funded? As I mentioned to you, as insurance professionals, our job is to make sure they have the right amount of money in the right place at the right time. And then do the funding methods, like when we look at the insurance contracts, the disability buyout, the life insurance, do they coincide with who the buyer's supposed to be? That matches with that. Or do we have the right amount of money, right place, right time? And are all the owners comfortable with what the terms should be? On this next slide, you see kind of an example of the report and how it'll be a thorough report. I just have in the middle of that a picture of the graph with the 5 different methods on it. And as you can see, one of the 5 methods is highlighted in blue, so we pick which of the 5 methods is appropriate based on the nature of that company. And we want to make sure that we lead them through a process so you can see it's not just the valuation, but it's planning as well. So we're going to make sure that you aren't just out there to deliver a number, you're out there to deliver a number, and what do we do with it? And the last slide for me will be to talk about the sample of the buy-sell review. And as I mentioned, those get a little bit lengthy, but we want to make sure that business owners know a lot of times a buy-sell agreement is just like a will, and that it gets completed and then it gets stuck in a drawer and it doesn't get pulled back out. So when we go through it, we're going to make sure in as best we can lay kind of language. What's the structure of the agreement? Is it an entity purchase? Is it a cross purchase? Or is it a wait and see? And do they have the right triggers? Do they just have death? Do they have death and disability? Do they have divorce, bankruptcy, all the other termination of employment? Do they have all those? Do we know how to determine the sales price? Do we know what the terms are? And this will tell us how to structure the funding. So with that, I'm going to turn this over to Mike to talk about the varying business owner solutions we have with disability income.
All right. Thank you, Patty. The next slide about the IDI Solutions, really though, what we're leading to here is what Patty's been talking about is helping businesses plan and thinking through the events and the problems that need to be solved, sometimes through insurance products, sometimes with life insurance, sometimes it's with disability products. So I want to talk about the disability solutions inside this planning process. There's really, if you look at this slide here, there's four numbered down the left-hand side. There's four areas of planning, but on the right-hand side, there's a personal need, which is two products, and then the business need. If you think about income protection, why as a business owner, why does an employee work for, a key employee work for a company? It's to make money. And so how are we going to protect that person or protect the company against the loss of that person? Well, income protection is obviously one of the biggest problems, is that if somebody's too sick or hurt to work, where's the money going to come from? Is the business going to still be able to keep paying the disabled owner? Most likely not, at least not for a very long period of time. And so that's where the insurance comes in. So our solutions is individual DI. A lot of times group long-term disability can be involved in this as well. There could be an existing group LTD. We may even recommend to be group LTD. We have a core value income protection offering, which is something that's exclusive to Principal, that we're able to offer a lower cost option for riskier occupations. And then the next one, of course, is when there's 3 or more lives, we call it multi-life DI. Employer, or if there's a situation where you can have employer-provided individual DI, like an executive bonus plan. So the first area of planning is income protection, and in my opinion, that's the most important area because it's such a long period of time that somebody's going to be making their money. The second one is retirement savings. Not many carriers have the DI retirement security product like we do. If you think about the need for income protection, there's also a need for retirement. I know many people that have been disabled for a long period of time. Some are permanently disabled and are never going to come back to work. Some people do pass away, but many people just live disabled with a chronic illness or an injury. They're just not able to work anymore. So the question is, does their need to save for retirement change because of a disability? And the answer is no. So that's the problem, is their inability to keep saving for retirement. And our solution to that is the DI Retirement Security, which is a separate individual DI policy that's paid to a trust. So if they become disabled, they still have retirement savings going on. That takes care of the personal needs. And then we're back to the business protection side. If you recall from the survey, it's the #1 concern for a business owner. If that's what keeps them up at night, is how to protect my business. There's a lot of parts to protecting, one of which is a disability for one of the owners or one of the key employees. And so our solutions to that issue is overhead expense for that small company where you've got 1, 2, maybe 3 or 4 owners, where their daily involvement is really important to the business, maybe 15 or 20 employees or less. When you start getting into larger firms and larger companies, the day-to-day involvement from an owner really doesn't warrant owning an overhead expense policy. But that small company, think about small companies that maybe like a dentist or an optometry practice or a CPA firm or a consulting practice or an engineering firm where that business owner needs to be there. And if they're not, they've got a problem. Employees still need to be paid, light bills still need to be paid, all the expenses are still going to be there. And overhead expense is the solution for that, is to give them money when the business owner is out to buy them time. Time to what? Time to recover, hopefully come back to their business and still having enough money going in, or time to sell it to a suitable buyer versus having to dump it or just lay a bunch of people off and have nothing to sell. So overhead expense is a great tool to buy time for small companies. Now the business loan protector is the next solution. Is if a business owner or owners have business loans, they're obligated in some shape or form to keep paying that, and the bank's going to get their money. So we have a solution called Business Loan Protector that's going to secure those loans so if they become disabled, the monthly payment to the bank or to the seller, whoever is financing that loan, is still going to be paid. It's a very popular, it's a niche product, but it's very popular in that small, mid-sized bank who does a lot of the business lending. And so the Business Loan Protector is just an excellent tool. Not many carriers have it, Principal being one of 3. And it's an excellent niche product, again, trying to protect their business during a disability. The last one is key person replacement. Everybody on the phone is sort of key person or key man life insurance. And I ask every business, I say, who are your key people? And then I define it. And by key, I mean if you lost one of them to death or disability, or if they simply left you to a competitor, it would hurt. And they'll tell you. Key person replacement disability serves the same function. The difference between life insurance and disability, of course, is in disability you're not dead, but you're still not coming to work. And so key person replacement is an excellent solution to solve that. It can be on owners. We write it up to 50%. You can have 50% business ownership or less. So sometimes you work with a law firm and you've got 3 attorneys and they all have ownership. Well, they all might be key. As long as they have 50% or less ownership, they would be eligible for the key person replacement policy. And then the last one is exit planning. How do you get that business transferred properly, and is there going to be money there in the event of a disability? Well, the life insurance can take care of the death part of it, and there's other planning for the divorce and departure and the other retirement and so on inside the buy-sell agreement. There's other planning to be done. When it comes to disability, does it make sense to look at funding? Where's the money going to come from if you lose one of the owners? So disability buyout is a great solution when there's 2 or more active owners, and that funding is something that would be of value. If the company's not worth much, or there's one owner, disability buyout, or if there's a parent-child relationship, you have a dad and a son who own the business, disability buyout may not have a role, but it's something to have this conversation with to see if there's a need. Go ahead and flip to the next slide, please. We have a business owner program at Principal that looks at the business owner, and our whole objective is to look at really 3 pillars and try to get them the best occupation class as possible to make it as competitive and as affordable as possible, no matter what product that they buy. There's 3 components. There's the stability, there's success, and size. So if you look at our business owner program, go ahead and flip to the next slide. We have those categories broke out into what the occupation that we're going to give them. So if you have business stability is the years of ownership, looking at their duties, 50%, less than 50% duties, but you have 50% or more ownership, we're going to look at that more favorably than less than that. Financial success. If they've been profitable, the more money that they make, the more attractive they are to us from a risk perspective. And then, of course, the business size. When you have more employees, it tends to be a better risk for us from an insurance underwriting standpoint. And so you can see the subsequent occupation class on the right-hand side. As we look at the business owner, I'll give you a great example. Work with a landscape company, and you say, landscape, oh, that's got to be blue collar. Well, it can be. A lot of times the landscape started blue collar, then they've grown into the point now where they're out there bidding jobs, supervising, hiring, firing, and so on. And we just worked with a company that's landscape. There's 2 owners. One's doing sales, one's doing operations. They've got crews to go out and do all the work. And because of the number of people that they had, we were able to get them 5 A's. And so in the old days, they would probably have been an A or a 2A, but because of their success and the number of people that they have working for them, we're able to get them to a 5A occupation class. It made a very, very big difference. So go ahead and flip to the next slide. So where do we start? first of all, think about, and I hope throughout this that you've been thinking about businesses that you know or you can call on or current clients of yours. Think about the need that they have for this conversation. So that's where you get started, is you find businesses, whether you know them now or you have a way to find them, and have this conversation. Offer the complimentary business planning services. It's a great way for them to do something they haven't done or haven't done a very good job of. And it's something that doesn't cost them any money. It's a complimentary thing from principal. Patty mentioned the things that we would need. There's the informal business valuation, the 3 years of financials. We have a fact finder. You can see it on the right-hand side. Talk to your Plus Group provider and Plus Group office. They'll be able to get you all the material here. All you do is complete the fact finder and send it down. I was on a call yesterday with an IT company, and we went through this. We have two owners. One's about 60%, the other one's 40%, and they had some concerns about their buy-sell agreement. So I offered this, and they went through and gave us 3 years of financials for their business valuation and their copy of their buy-sell agreement, their operating agreement. And it's taken us several months to kind of bring all the pieces together to have the conversations. And as of yesterday, they've committed, because of our process here, they committed to buy additional life insurance from the advisor and to fund their buy-sell agreement with disability. We're going to circle back to some of the other needs, in particular income protection and key person replacement. But for now, they're going to go ahead and execute because of our work that we've done for them, complimentary, both the informal business valuation and the buy-sell review. They're going to buy, and that's a big deal. And without this info, and they are so grateful for the information that we provided. In fact, one of Patty's counterparts is going to be on a call with their attorney to talk through the buy-sell review and make sure that their attorney knows some of the pertinent points that need to be cleaned up. Go ahead and go to the next one here. Is what are the quick tips for ideal prospects? Well, in the IDI Solutions, it's 2 to 10 owners, ages 30 to 55. Of course, there's ranges and there's rules of thumb, but when we start looking at a much older ownership group, it gets more difficult. If you have several owners that are in their 60s, our disability products are starting to run out of gas, so the ideal prospect is a little bit younger than that. The owner is key to the success of the business. As I mentioned before, it's the small and mid-sized companies where the business owner needs to be there, needs to be active, involved. That's where the planning really is most valuable. On the buy-sell reviews, if they have to have their buy-sell agreement, if they have one, that hasn't been reviewed in the last 2 years, they would be a great candidate for that. Operating or partnership agreements, many times they have operating agreements, but it's really not a good buy-sell agreement. Go ahead, we'll take a look at that operating agreement and make all sorts of suggestions on how to clean it up, put an actual agreement together. We have templates for cross-purchase and entity purchase, and we can be of some real help in doing that. So informal business valuations are great for professional companies like law firms and dental practices, engineering, and so on, manufacturing, construction, but we're looking for profitable businesses with revenues of $500,000 or more. So if it's a startup business, not a great fit. If it's a company that's not overly profitable, not a great fit. There are certain occupations that or certain situations that just aren't a great fit, so call your Plus Group office and find that out. The last slide is a success story, which is, this is one of our cases. The owners of a consulting firm, the producer met the firm, the owner of the firm was snowboarding. The clients wanted to expand their employee benefit package and fund their buy-sell agreements. Kind of sounds similar to the one that I had yesterday. The approach the producer offered the no-cost buy-sell review and business valuation, which they took advantage of, and then the reports helped them identify the needs. So what did we end up with? What we ended up with was disability buyout, key person replacement. They bought some term life insurance, they bought IDI, and you can see the premiums down the lower part, or the commissions on the lower part. This was worth everybody's while. So I have many, and Patty, we could go on and on with success stories and the ways that we've helped people. Sometimes it's at claim time, sometimes it's in separation and so on. There's just so many ways that the planning reveals itself, and the value of it reveals itself over time. So I'd like to open, I think that's the end of my part here. I'd like to open it up for questions, and Tracy, if you can go ahead and take it from here.
Alrighty. Again, if you have a question, please go to the question pane on your control panel and type it in. Again, just type it in and we will address any questions. I think you guys did a great job. And if anyone has any questions, just go ahead and type them in. Well, I don't see many because you guys did such a great job of explaining everything.
Thank you.
Okay, well, again, if you have any questions later and think of anything, please feel free to reach out to your local Plus Group office, or you can contact me, Tracy, T-R-A-C-E-Y, at plusgroup.us.com, and we'll go ahead and get your questions answered. Again, this has been recorded. You will get a link that has the presentation as well as the audio portion. You should have that within 24 hours. So again, thank you, everybody. Thank you, Mike and Patty and Principal, for your time today. And we appreciate everybody joining us, and have a wonderful week and a wonderful holiday. Thank you again, everyone. Bye-bye.